Good morning, everyone. So today we're going to have a look at currencies for the weekend review. I'm still expecting the dollar to weaken, and even more so now that we've got Donald Trump on our side calling the European Union currency manipulators. I am absolutely not selling my position at all right now because you're going to see the market, certainly the sentiment in the market, drive it short term. And the dollar, the pattern that I've had on it for some time now is ABC down for A, ABC up for B, 5 waves down here for C, into 93 at least. From there, we could see more upside. Now, what effect does Donald Trump have on the market? It could be devastating in terms of downside move. And I'm only basing that on what we know for sure can happen. And that's some sort of Plaza Accord agreement if there's enough pain in the system. Now, there is enough pain, although we're not seeing that pain. There is enough pain. You got the corporate debt situation in China. You've got the unfunded liabilities in the United States. Europe, it's quite the disaster as well. Now, there are a lot of you guys that live in Europe, and you'll probably notice that, certainly for me, I walk around the streets, and an awful lot of the stuff that you see on the news, we never see any of that. And that's not the issue in Europe. The issue in Europe is in Greece and Italy. Now, as I said, that will probably stem into the rest of the European Union if it flares up into a recession. But certainly here in Spain anyway, in the northern coast, I know there's different stuff happening in Catalonia, and of course there's stuff happening in Paris itself. But aside from those two, I don't see any issues in Europe. That's not the problem. The problem, as I said a moment ago, is Greece and Italy and the debt issues that they have there. So every single region in the world has their own issues. And the reason I'm bringing that up about Europe is because I spoke with somebody recently that said, I see all this stuff on the TV, but I don't experience any of that. And that's true, you don't experience it. But in the United States, you guys probably don't experience the unfunded liability situation either. And in China, you guys probably don't experience the high corporate debt situation either, right? So there's an awful lot of issues beneath the market that are stemming. It doesn't matter where you are, what region you're in, they exist, and we have to be careful of those. So a Plaza style agreement is probably going to happen at some point, and maybe it's going to be strong-armed by Trump. I'm not sure. All I can do is focus on the near term. My expectation dollar index is down to 93, and I continue to believe that that is what will happen. Now, mirroring my view on the dollar index, I think this is what's going to play out for the euro. Exactly the same, except inversely. So I've held this for some time. My expectation is 120. What I'm very frustrated about with this trade is it's very similar to the trade that I have in Disney, but it's very different at the same time. It's very similar in the sense where I bought it, it's gone sideways, haven't made any money, but I continue to own it. It's different in the sense where my expectations are very different, because I don't know what happens after 6 to 12 months, but I'm quite confident in the near term the dollar will weaken. And that is the risk that we have, that I have with the euro dollar. But as I said, I do think it is going to play into profit very soon, and then we can make a decision on that after. So right now, I think we've bottomed out probably for a B wave, potentially, and we're going to start pushing higher up to 118. What happens after that, I'm not sure, but I'll be in profit. And that's the main thing if you're a trader, is that you're closing out profits. Doesn't matter how big it is, it's just that you're closing out profits. So I still think there's more upside to be had here in the euro dollar. Next on to the Australian dollar and 200-day touch, 1, 2, 3. It's very important. If this is to move higher, we need to break that. But look at the trend on this 200-day moving average. That needs to flatten out, and then price needs to burst above it. And when price bursts above it, that's when you get into it. Until that happens, I'd be happy for this to move sideways, because that would be a massive trend change. And when you zoom out and look at a big picture, on that trend change, your upside is 82. At the very least, back to the prior degree wave 4. But ultimately, it could be as high as the dollar. It could go back to parity based on this being an ABC. What happens with corrective patterns? We always take out the prior move. So this is a bigger 8-year move that we've seen so far. So we could be going above parity over the next 8 years, 9 years for argument's sake. So above the 200-day moving average, as I said, we need to see it flatten out, and then we'll make that decision. But the Australian dollar, yeah, big picture, looks like we're closer to a bottom. Near term, we could still push lower. That's the reality. You've seen the kind of volatility that we can see very near term right here. So do be careful in this. As I said, the trend will likely give us directional bias on where we should be positioned. Next, moving on to the British pound, and with the British pound, very interesting because I was expecting that this could be an ABC and then another 3 up, and this is actually a WXY. It started to shoot higher right after it said that, and I'm wondering, is this A, B, and this is going to be a very sharp C wave up to 140. Could be the case that this is actually going to be a lot higher. And why am I saying all this out of the blue? As I said, it comes down to Donald Trump's tweets, that there's certain countries out there, certain regions out there that are manipulating their currency, specifically the European Union. That would also probably have an effect on the British pound, and most currencies globally would be at risk of being called currency manipulator. So yeah, this could actually start running up to 138, 140 easily. This could be a 535, or this could be a new wave higher. This could be all of wave 1, 2, 3, 4, 5, all the way higher. So with the British pound, I am expecting continued upside, and I won't be trading it because I don't fully understand the fundamentals in terms of Brexit. I've taken my eyes off the ball with that one because it just got a little bit frustrating, and I think there's other areas I can focus on with higher degree of probability. But back to the chart, it's suggesting more upside, and Donald Trump's tweets could certainly back that up as well. 38, 140, somewhere around there could be a realistic area for the pound to rally to. Next, moving on to the Canadian dollar, and let's delete that off for a second. This could all be an A, B, C already in. This could be what's called, as you all know, what's called a running flat, where it tricks you on the downside and then it tricks you on the upside. How did it trick us on the upside? We never made a new high there. So we made a new low, never made a new high, and now it's starting to break lower. This does bode well for crude oil, but I still think crude oil needs to correct itself. This could be leading crude oil. Back in 2016, the Canadian dollar was leading crude oil by a total of 5 months. And that was the signal that we were given that we should be getting long crude oil because the Canadian dollar is so sensitive to what happens to crude oil. Anyway, near term, it's suggesting that ultimately crude oil probably gets stronger. I'm okay with that, even though I closed out my position, because I opened a position in Chesapeake Energy, which will definitely be sensitive to the price of crude oil. And it will probably continue to push higher with crude oil strengthening. So I don't mind if crude oil strengthens, but if it weakens, certainly I want to be a part of it, and I'll be buying up a position on the long side on some sort of pullback. And last but certainly not least is the dollar yen, and I'll show the big picture here. This could be the outcome here. This could actually start another maybe flash crash even down for this final Y wave. It could happen sharp, and it could be on a wave 2 in the S&P 500. But ultimately from that low there, what you should expect is another rally higher back up to 120 around that area to complete off this, whatever this move is, 3-wave move. Could be more bullish than that, but I still think that this is actually 3 waves up, 3 waves down, probably 5 waves up to at least 120. So down to 102, then up to 120. That's the expectation for the Japanese yen. I think it could drop based on the chart pattern at any moment now. And again, if the European Union are being accused of currency manipulation, God forbid what Donald Trump has to say about Japan, who have monetized everything. Absolutely everything, they've monetized it. So this is the risk that an awful lot of these central banks around the world have. And the Japanese yen is definitely going to come under fire. I've no doubt in my mind that there's going to be fireworks with the BOJ. So 102 is the target. Around here could be a good area to get short. It definitely looks like it's starting to slow down, and then around the 61.8% Fibonacci of the entire move. So it's a perfect time for it to slow down, and then it should drop into 102. With that said, this is the last currency of the day, guys. So if you have any questions, please do reach out, and have a wonderful day, everyone. All the very best.